Ladies and gentlemen, welcome. Today is 11th of Feb 2021, 19 minutes past 5 local time. This is cable pound dollar on an hour chart this time, so you can see a bit more details. Price is 1.381. Yeah, so as I've said in the last video, there was good analysis. So those shorties were in the dumb money tolerance. Now you see it better also with the dumb money switch indicator. So both dumb money longies and shorties have low activity, and overall there's a bit more longies and shorties. These shorty nests are therefore within the dumb money tolerance, meaning that, as I've said in the last video, the smart money can let the price drop even though these can close in break even or profit, which is exactly what happened when you look at the market causality now. And also secondly, as I've said, the bumpy ride, you see sharp pullbacks, and this can continue, you know, it can go down overall, but with sharp pullbacks. As I said in the last video, I used the pullback up for a nice short entry here, but these are advanced trend trades, as I've said. Yeah, this is not for beginners of the market causality, because you're trading in the tolerance, yeah, into the dumb money tolerance, because normally we like to trade the opposite way of the dumb money, obviously. And here you see nicely how short-term stops of the dumb money longies are taken out with this down move. Yeah, so this one is just taken as we speak, and if the price goes below the shorty nests, they will reduce, because some shorties will be able to close their positions, as I've said before. At the same time, yeah, the upper longies who entered expensively into the market trying to trade a breakout up are now into loss, and the stops get taken out. Okay, this is one of the important principles one has to understand as a market causality trader, because via these principles the smart money algos succeed in making everyone lose, no matter whether they bought or sold or what kind of strategy they follow, mean reversion or breakout or pullback or trend trading or range trading or scalping, etc. Doesn't matter, because, you know, eventually the money positions will accumulate. And this, again, as I said in the last video, is one of those cases where there is some dumb money tolerance, and because overall these shorties are not significant in that particular scenario, if they close their positions, they are allowed to get out. Now obviously all these traders, if they would consistently apply the strategy, would be the net loss overall, which is why what is happening and why so many traders lose. But normally they get either completely stop hunted or kicked out of the market, or they get a margin call, or they increase and make the problem worse, etc. But in this particular case, because of the money tolerance, they can take off some of their positions. Now obviously, as you can see, we have here this shorty accumulation around the 1.377 level, and also an empty. And obviously these shorties entered at worse prices. So the lower the price comes, the more stops it takes, the higher is the likelihood that there will be pullbacks to the upside, obviously. Yeah, especially if more shorties come in the next hours. If we have more red bars over the next 10 hours, so shorties trying to short down, so the new shorties together with the old shorties, which are already in the market, they can lead to pullbacks up, you understand, to price in this dumb money short activity. If we have massive shorties and dumb money switch, so from longy to shorty, then of course they can retest the high. That remains to be seen within the next 10 hours, and of course the subscribers will know first. Yeah. But if the situation stays like this, all longies come in and the little dumb money switch continues, they will all go down with pullbacks, bumpy ride, trying to price in at least those short positions which are already in the market. Remember, time and range principle, lasso principle, pricing in principle. Yeah. So yeah, it all makes sense, ladies and gentlemen. It makes absolute sense. And if you have studied the causality enough, you will understand on those days why suddenly some shorted positions are allowed to get to profit. If you understand the game, it makes absolute sense, because they are not the priority. Okay, And if you would only see a naked price chart and no other data, you would see that, okay, look, we have a double pin, we have another high taking out tight stops, and a third high, which is a lower high though than the previous two, you know, which looks bearish. These are situations where you feel that it's kind of bearish, but you also know, looking at those bars, that there's going to be those pullbacks. But look how precise that is. I mean, come on, this is like clockwork. This is amazing. It's amazing that I'm able to show you all this live, and you know, for you to observe, the ones who follow this work, to actually observe it. Anyways, it's now 5:24, so I'm closing, and I will upload the video. Stay safe.